Hey, good morning everyone. This is Tommy Lackey with Power Investing. Today is March 26th, 2024. And today we're going to do a subsector drill down and take a look in communication services at the media and entertainment subsector. Now, communication services as a whole, you can see right here in our equal weight sector rankings, it really has not been a big performer. It's kind of held its own. It's been flat over the last quarter with a little bit of back and forth, but really has moved sideways for most of the year. However, we noticed yesterday that media and entertainment in our subsector list became one of the RS movers for the day. It was up 20 RS points over the last 5 days, and it's moved from a 27 quarter ago to a 24 a month ago, a 35 last week, and then yesterday it moved up to a 55 with a 0.93 return, and over the last week it's up a couple of percent. So it's something that we wanted to take a look at, see if there's something here. It'll be early, obviously, since this has been an underperformer, but let's see what we can find. When we go into the subsector, we start off on the subsector page, media and entertainment, and basically it's something that we want to kind of start pulling down and see what's going on in our RSI chart first. And we take a look and we can see that the RS has really dropped so far this year, since probably late January, but started to roll back early March. Is moving its back way to highs as price moves up in this cup. Basically is broken out of the handle, if you look at it from that stance, and is now looking to break out of the top of the cup. So if we look at that, all this happened while the RSI remained in a bull range. Each one of these little pullbacks tested the RSI bull range and held, and it looks like it's ready to try to move above these particular highs. Now, this is a high handle if you look at it like that, but again, remember, this is really not a pure index. This is just us trying to give an equal weight depiction of what the whole sector is looking at the moment. When we move down to our breadth chart, we can see, like I said, this one is really early stages. The breadth really hasn't perked up yet. In fact, the percent above the 200-day moving average is actually dropping, is making its lowest level right now this quarter. Now, the question is it breaking down, or is that kind of the end of the move and we start to get some buying action in here if the rest of the markets remain strong? And that's kind of where I'm looking, is that, the short term percent above the 20-day moving average has continued, as you can see here, to make higher lows and is above the 50% range while these other two fall. So it looks to me like this is just some settling as things go. And even if we take a look here at the summation index, keep the whole chart on here, it's still working its way down as the oscillator is below zero, but just keeps kind of playing with that line. Oh, I'm sorry, down here. It's below zero, but keeps going back and forth above and below that line. On down to our relative comparatives, however, things start to perk up a bit. We can see that versus our equal weight power universe, it's made a higher low, and it's trying to move back higher after coming off the absolute lows in early March. Same thing with versus the communication sector as a whole. Actually, it's been our communication services sector as a whole, it's been a runner. And then we see the ratio versus the SPY and the IWM are starting to perk up. So this is something we want to keep an eye on. New highs, new lows are still very mixed, back and forth a lot, but we've had a couple spikes up here, and we just want to see if we can get rid of some of these more consistent lows and start building on the high side. But that's not giving us any good signals at the moment. And then we move down finally to our relative strength rankings. And in our relative strength rankings is where we start to look at the actual securities. Now, I did look for an ETF in the space to see if there was something we could find that would be functional. There's really not a good media and entertainment one until you get into internet ones that are all digital, or PEJ, that is more on the leisure side when it comes to gambling and resorts and things like that. So really nothing pure in this space, but if we go ahead and jump down to the stocks, you can see there's quite a few on the list here that have already moved really big. But again, with this being an underperforming subsector for a while, that doesn't mean these are necessarily done. So when we start to look through, first we'll start with Cardlytics, which is at the top of the list. And as we can see here on the daily chart, this daily chart showing obviously that there was a big move up here to the right. It's up over 100% over the last week or so, and then it pulled back. So far today, it's pulling back since this is after market open. But as of yesterday's close, it was right up to these highs. You can see right here on the weekly that makes the weekly look a little bit different, but we're still early in the week, so let's wait and see where this closes. But let's say we can get back up towards yesterday's highs and close up near there. We have a big kind of base here, cup and handle-ish or higher low over here, that if we break out of this, there's a lot of right side on this chart that still has room to move. All right, our next one we want to look at is NXST. That was on the list. This one's consolidating a little bit more on the daily chart. It's held its RSI bull range over the last 2 months while it's been kind of consolidating or wedging sideways, and now we see if it can break its way back higher. As you can see, the RSI bull range RSI did move into a bull range, and it came back and consolidated over the same time period, and now it's trying to move back out of that kind of wedgy type action. As you look down here, this is one that if we go down to our MACD chart and our cloud, it's trying to move out of the top of the daily cloud right here. And at the bottom, our MACD has moved its way up, crossed higher, and is looking ready to cross the flat line. All of these are incremental bullish signals for the momentum in this particular stock. So this one looks good as far as one to see if it can break over about this 170 area and then make back and start working up again. The right side, 210 is the highs here. On the previous highs, 210 to 215 area on the weekly chart. So our next one, we move to Wiley, John Wiley & Sons. This one's had a really big move off of earnings in early March, and now it's been consolidating sideways for a couple weeks. It's something we look to move over this high here, and as you can see, the daily's in RSI bull range on nitrous after that big earnings move, and the weekly is just now moving back up to the 60 level to see if it can shift into a bull range. I mean, this is such a wonderful example of a bear range in the RSI, to where it stayed under 60 the entire way during this downtrend, even with some big jumps in the middle. But when you look at this here, now we're back up at this 60 level, and if we can kind of circumvent and move our way back above and not get rejected here, it could put us in a great position to continue the run up the right side. And I think this 47.50, 49 area is an area I'd be looking at if we move that way. EEX, Emerald Holdings, is another one that basically gapped down on earnings. Bad earnings, it missed its earnings, gapped down, and it's already right back where it started within a month. This also is moving higher, has closed the gap, moving higher here in a new RSI bull range after that little shock. And then the weekly never even tested its bull range for the most point. So again, something that really looks good to us as far as having opportunity to continue higher. Our next final one, or a couple of bigger companies, let's not say final, is like Disney. Disney's one that's already been running. It gapped higher on its earnings. It consolidated, and now it's running again. Now, again, the daily might look a little extended to you, but our RSI for us is not near that 80 line or above it yet. So once it gets up there, that's when we start worried about our overbought. And then the weekly has room to up there as well. So how this consolidates, right now it's kind of playing above the rim, as we call it. It's a basketball term for basically a very high level game. And pretty much what's happening here in Disney right now. So we'll see if it comes off. Excuse me. But the weekly looks like if it breaks this area, even if it can consolidate some, there is so much room back up this right side. And that's one of the hard things after these kind of long downtrends, is most people don't get back on them until they're way back up near those highs because they don't trust it. It's a hard thing to come off these low bases, but if you have the right data and the right plan, it's certainly something you can take advantage of. Finally, we'll look lastly at Netflix. Again, this is one that's continued to be strong. It's had an RSI bull range for quite a while, over 2 earnings here back to October, and it continues to move up the right side. Now, it looks, a lot of people are like, it's already ran a long way, but look at this RSI. It's another one of our mushy RSI trends where price just continues to grind higher with a day or two pullback here and there. This is a lot of buying power when that happens, even if the volume is not overly extreme. So see, this kind of gives you an idea of what's in that sector. Go back to the RS list on the page and take a look at all the different ideas. There are small, medium, and large caps here that you can take a look at, and there are plenty more on that list. We just want to give you an idea of how to use it, how to do some of this digging yourself and find the best opportunities out there. All right, we hope everybody has a great day, and good luck out there.